Let's talk about Tesla. Okay, what was it? More than 2 years ago, you're at Sohn. You pitched the converts.
Converts, yeah.
Where are you with those today? And then I want to talk to you more broadly about that company.
So if you take a step back, right? If I asked you to sort of, attempt to drive a golf ball off the pier here into a teacup and gave you 1 million tries, I suspect that in 1 million times you would not be able to do it. But if you then took somebody else and they were able to do it 9 times out of 10, you'd say, wow, that person is a great golfer. The analogy that I would make is Elon basically did that equivalent. He was able to send a rocket into space, do all kinds of interesting, enormously productive, useful things for the world while in space, and then come back down and land on a boat in the middle of the ocean. The kind of technical sophistication that he has in his mind, that he's been able to apply across his companies, is second to none, quite honestly. So when we looked at Tesla, what we thought was a company at an inflection point that was as close to its version of an iPhone moment. And what I mean by that is a company that had been growing up, taking risks, and had finally found the mass market product that would unlock an enormous amount of product market fit. And that was the Model 3. And so far, what I would say is he's living up to what he has signed up for, which is to commercialize electrification, to commercialize an incredible user experience at a price point that has frankly cannibalized its competitors. And what you see in the results, in my opinion, is a company that is now maturing under all of that demand. And so, again, is it the best suited company if you want to drive and observe quarter-over-quarter precision and performance? No. But if you want to take a step back and take a 3-5-year view and say, where can I compound my money? And particularly with the converts, what's so beautiful is it's downside protected because it sits on top of all the equity and the other debt. And so if you have any concern that there's liquidity issues, or if you have any concerns that the company may have to sell, they get paid first. So to me, it was a riskless option on the Edison of our generation.
But you weren't you weren't necessarily comfortable enough with the story to buy the common stock?
The reason is because the common stock is not controlled, unfortunately, enough by him or the insiders. What it's controlled by are a bunch of vulture-like venture and hedge funds, mostly hedge funds, who like to prey on that company. If you look at, for example, the Twitter traffic, or if you look at the forum traffic around Tesla, the amount of hyping or under-hyping, the amount of sniping is enormous. All of that signals to me that it is a market that is out of the control of the founders and the executives and firmly in the hands of financial manipulators.
Well, come on,
so
I mean,
my perspective is buy the bonds, you're protected, and allow Elon to execute.
Isn't the founder and his actions responsible for a lot of what you're talking about?
Well, all I see, frankly, is that he has tried to execute to the best of his abilities. He puts out aggressive numbers. He tries to meet those numbers. Sometimes he misses those numbers. What would you rather have?
Often he misses the numbers.
But that's okay, because in the course of the year or in the course of the 5 years, if you take a 5-year step back and say, what has he promised in 2014 to what is he doing in 2019, you'd be ecstatic. Similarly, if you take a step back and say from 2019 to 2024, let the man do his job, will we be better or worse off as a planet, as a species, as humanity, as consumers? We will be better off.
And no one debates his genius. It's lauded, celebrated. It's the fact that the way he runs his company. You're comfortable with that? If you're an investor in Tesla, you're 100% comfortable with the way he is a CEO?
Yeah.
None of the actions that he's done over the last year or so give you pause at all?
What do you mean? Meaning the Model 3 is an incredible car. I just bought one. It's incredible. I bought it the way that it was...
Funding secured? I mean, what was that?
Okay, maybe he stepped out of bounds. My point is, you're getting caught up in the window dressing. I'm focusing on the main course. The main course is on the table. The choice for you, as a buyer or a seller of that stock, is do you want to eat it? If you get caught up in all of the stuff around the edges, maybe he may mistweet from time to time. My point is, who cares? Your job as a smart investor is to separate the facts and the news from the fiction and the noise. And all of that stuff doesn't matter it does not change the fact that tens of thousands of consumers are buying that car faster than they can get their hands on it. It doesn't change that the minute you sit inside that car, your definition of what is expected is altered forever. And you wonder why every other car around you that you ever step in, that you may buy, doesn't have the same things that that car offers. So at the end of the day, whether you like his style or not, his substance is irrefutable.
Sure, but I walked down the street here in San Francisco the other day. I see a billboard for the new Audi electric car that's coming. I mean, competition is coming. If it's not already here, that gives you no pause?
You're right, because I remember all the Zune media players I bought after Apple released the iPod. I also remember the enormous number of amazing smartphones I bought when the iPhone was launched. It's not what people do. You know, it tends to be the case that when you redefine expectations and you have a category leader and you have an indelible brand and a mark that people recognize, the easiest decision, let me be a little pejorative, the lazy decision is to pick the winner and go with it. And in this case, there is a clear winner in electrification. It is done. That die has been cast. And so now the question is, can he build the infrastructure to deliver the demand? And if given time and if given patience, I believe he will, and I vote with my money that he can do that. And everybody that bets against him can do that as well, but at what stake, really? Because it's not as if there's no downside protection for the stock. The people who short this company are so short-sighted because the number of companies that would come out of the woodwork, you don't think that Apple, with $200 billion of cash, backstops this company and has a chance to enter a $1 trillion market overnight by buying that business if it gets imperiled in any way? Google, which already tried to buy it, wouldn't try to buy it again?
I'd say it's a risk.
So what are we betting against? We're betting against a cleaner Earth because we don't like that. We like to suck in the carbon monoxide and the fumes from all these cars. We're betting against beautiful flat screens, beautiful ways in which to manage your experience inside the car because we don't like that.
No, we're betting against whether he can deliver what he says, the fundamentals of the company. That's what they're betting against.
No, that's not true. People are betting against his style. They don't like his style.
It's not just that.
It is
come on,
just
there's smart people like Jim Chanos. He's a smart investor. He's not betting just on his style.
Jim Chanos makes money once a decade. And while the market rips up, the guy just bleeds money and he's never on CNBC. And every time something works, he's there for 5 minutes. Great for Jim Chanos. Fantastic as a hedge in a portfolio where you have 1% in a short fund. But the reality is being long equities makes sense. Being long innovation makes sense. Betting against entrepreneurs that are changing the world has never been a profitable endeavor. Why start now?
I'm sure Mr. Chanos is going to take issue with your numbers and some of your comments. And
I'm happy to post my returns against Chanos anytime he wants.
Right. We'll step away for a moment. Up next, widely followed tech investor Dan Niles makes.
The analysts following this stock don't know how to analyze it because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency.
I could say, really off the high of 2014, you're down 20% by holding Tesla for 5 years when supposedly it had a huge competitive advantage. Yeah. There was no competitors in their space. Right. It was being priced as a technology company. And the stock really at a point where now it looks like there's some balance sheet issues. The competition's never been heavier, although I think you'll push back on that. I think I appreciate your argument, which is that they're not an auto company. They're not a tech company.
But even more, just let's take the electric vehicle. The Model S. 2012 it was launched. Yep. Not one of those competitors is anywhere near it. We're 7 years later. Now let me take your other point. This trading around, this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of 2 things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe is going to break out. And the longer the base, you say 5 years, the longer the base,
The longer,
you know, the
yes.
bigger the breakout. So we're really looking forward.
Jamie Stone in my office had a Porsche. He bought a Model 3. He said, it's not comparable to a Porsche. He says it's unbelievably different. Our trader, David Schneider, just bought a Model 3. He says it's the best car he's ever had. My kids have, one of my sons has a Model X. He says he will never own another car other than a Tesla. Never. And if you talk to anyone who owns these Model 3s, they'll tell you the same thing. It's unbelievable. The quality, and it keeps getting better and better and better.
And they're buying, I assume, the
and so
$60,000 and $75,000 version.
So you're right. With General Motors, when they're making cars in their plants, they get 97% without defects. When Tesla has them, when you see those cars sitting around, that's because they're making them real fast and they're early on the ramp up. And when they're making them like that, what happens is that you don't have you have to make sure everything runs right. And so they're not making 97% yet, but the percentage they're making is higher and higher and higher. You know, I was out with a couple of guys, I guess 3 people in my office, and we were out at the General Motors plant in Orion, Ohio last Wednesday. And we were with the president of General Motors. He was 4.5 hours, and this whole team. And we're walking around the plant, and we're talking. This is where they're making the Bolt, and this is also where they're making the robo-taxis. And he was telling me, just to cut to the chase here, he said, what Tesla has accomplished is extraordinary. Extraordinary. My first question to, and Mary Barra says the same thing. My first question to him was that, you know, you got all these billions of dollars invested in plants that make motors. You're not going to need motors anymore. How is it that you're able to convince the board of General Motors to make these huge investments that are required in batteries and electric cars? Now, how do you, and the dealers don't want to sell them because there's nothing to fix. The dealers make all their money on fixing stuff as opposed to selling stuff. How do you get your board to do that? He says, well, Ron, there's a canary in the coal mine, is the way he said it. Canaries in the coal mine. What's a canaries in the coal mine? He said, well, we noticed that the General Motors consumers are using Uber and Lyft. We see these changes. He says in the next 10 years, the automobile industry is not going to be recognizable. Dan, who I think is an incredibly talented guy.
Dan Ammon?
Yes. He says that what is going to happen is that, I lost my train of thought on that one, but
that what he thinks is going to happen in terms of changing the car industry. I assume.
Well, electrification. So he thinks that when you get the cost of a battery to be less than the cost of a motor, then it's going to take off. And the battery cost, when I started investing in Tesla, the cost of a battery per car was $35,000 a car. $35,000. It's now maybe $12,000 or $13,000. The cost of a motor is $5,000 or $6,000 or $7,000. The cost of a battery is going to be half of what it is now in 3 or 4 years. The cost of a battery keeps falling. The cost of an engine keeps going up. Then in addition to that, he says that you have to have 10-minute charging. Right now, it's 20-minute charging for Tesla. I said, well, how insurmountable is that? And he says, well, he thinks it's technically doable and you could do it faster. But he is betting on the fact that he thinks autonomous driving is where he can establish competitive advantage. And as opposed to electric vehicles, he says the automobile companies can control how fast that comes on. But I disagree with that because there are all these countries that are saying, like China.
Right.
City by city, they're rolling out and saying no more internal combustion engines. Norway, no more after 2020. And city by city, they're saying you can't sell internal combustion engines anymore. It's amazing. So I think electric is something that's going to be really, really exciting for.
Point that you thought this would be $1 trillion company by 2030.
Yes.
That would be much more than doubling.
Yes. 20 times. 30 times.
How does that happen in your scenario?
Boy, it's really hard. And
it's hard.
It's really hard. And there could be, but he has all kinds of products. I think it could be a $500 billion battery business, $500 billion car business. I think that I give that better than 50-50 chance. I give the fact that it could be a $60 billion company in 3 years, I give that maybe 80% chance. So I think that in 3 years we can triple our money, and I think if you take my scenario and I'm right, and I think there's better than 50-50 chance in 12 years that he's going to get to $1 trillion of revenues. That means you're making $150 billion a year. $150 billion a year, the company's selling for $50 billion right now. You want to give it a 10 multiple, you want to give it a 5 multiple, you want to give it a 15 multiple. So basically, That's a big number compared to where it is right now. It could be 30 times.
Right.
But it's there's a lot of things. You can't just go out there. It's not like just advertising, getting people to buy your service.
You got a lot of things that have to break your way.
Yes.
And virtually every other car company in the business has to either go out of business.
No, I mean, I'm talking about selling 10 million cars. There's 90 million cars a year that are sold in 17 million United States. I think this is going to be the biggest car company. I think they have 10 million cars, 15 million cars a year. I think the battery business, where there's all this technology in the batteries, I think the battery business is going to be the biggest of car business. And I'm not even talking about being an Airbnb type of business that you have where you drive your car to your plant, you have $500 a month of payments for your car, and instead of you making them, then that car is just going to drive away as part of the Tesla fleet, and someone's going to use it during the day, and then that money that is obtained from it, half will go to you and half will be going to Tesla. And that's a business where Tesla has no money tied up. And then in addition to that, if those cars that they sell for $40,000, they buy back for $20,000, it's 100,000 miles that you can do a year, and you charge and you get 50,000 revenue miles, $50,000, $1 a mile, 50,000 for $20,000 investment. That's a big deal too, dropping 15,000 cars a market. I think the car companies overall are way behind, and they're hoping that they can delay the onset of electrification they know it's coming, but they would hope that they could delay it because they have hundreds of billions invested in plants that make motors, which is their competitive advantage. That's going away because you're not going to need motors anymore.